right. Now, the first thing I want to point out is that what we're looking at is the SPX, and this is over a year's worth of data. So going all the way back to the beginning of the summer of last year. And so you can see very clearly that we've been in this massive consolidation where we're in this big triangle and just consolidating down to some eventual inflection point, some point where the market's going to do something. That's because the market expected something to happen here. This is all kind of timed on the market kind of expecting the Fed is going to finally resolve down to whatever their maximum rate hike is going to be. And somehow the market creates this massive pattern that anticipates it would be right around here. Now, in the beginning of the year, I also anticipated this and drew this triangle around the February timeframe, somewhere around, well, January, February, somewhere around here. And I also felt that we were about to hit a inflection point. And so back then I drew this circle saying it's going to be somewhere in here. Now, it looked like, we're there, and there's been many false narratives, false signals that have led people to believe that there was some sort of conclusion to the Fed's rate hiking. And that's what we get when we get these big candles, these up and down ones. We get these ideas that something's going to happen, and then that hope goes away, and then we go right back to the sideways action. But as you can see, we went sideways for quite some time, and Definitely Gaming is actually very correct that beginning of April, we started just moving sideways. And you can see all these little purple arrows are pointing to these tiny little no range days. And if you look at the cluster of them and compare that to any other time going back, you'll realize that there's been more of those purple arrows in this short period of time, not only in just this past year, but if you go back 10 years, 20 years, I've never really seen this many small range days all clustered together. And so those make trading very, very difficult. Of course, the ranging days that we see, the big red candles and the big green candles, those are a different story. That gave us some reprieve and you can make some really good profit, but then back to this other type of behavior. So this has been, I would say, on average, in terms of trading opportunity for this period of time over the last 2 months, all of April and May, I would give it on a scale of 1 to 10, maybe a 3. So there has been opportunity. And in fact, I've made money throughout this entire period, although I haven't traded as much in this entire period either. But that's another story that has more to do with how busy that I've been in managing a much larger service. But I've missed out on a lot of trades. Today, I missed out on today's trade. I wish I had gotten into it because that would have been a fantastic winner for me. But anyways, it has not been the best of times. Now, what's great about things like this is that the market is always changing. In fact, the one thing that we can absolutely guarantee that is an absolute constant in all of trading is that change is a certainty. And I know that seems oxymoronic when you say the one constant in trading is change, but that's exactly what it is. Now, we've been doing something very similar for quite some time. However, you can also see that we're starting to curl up here. And that's why I had this little curve indicator here, or this line that I drew in here to say, it looks like we're starting to break out into some open air territory. So what I mean by open air territory is that if you look at these two coral lines, they are put there for a purpose. They are showing where there's a very large volume node. And if I were to go back to the E-mini S&P, which is basically showing the same underlying market, and you can see these purple lines are the same as these coral colored lines, right? So if you look at these coral colored lines and then look at the purple lines, they're the same thing. So, and you can also see the big consolidating move, all right? So I'm very keyed in on the activity here because when we break out of this big volume node, which we have been basically sitting inside of for quite some time, now we're just starting to break out and coming up to this big volume well, you'll see that there's very little volume up here. And let's see, we can bring in more of the market here. Okay, so you can see that compared to this huge volume node here, there's very little volume in this area here. And once we break out of here, we're going to quickly move up maybe 100, 150 points. So that's what's looming here. That's what the market is waiting for the Fed. And so what I anticipate, actually, I talked about this even way back here, was that I felt that we were at the precipice of a melt up. Right now, we're kind of in stasis, going sideways, waiting for the Fed to come out with their proclamation that they are either done with their rate hikes, or this will be the last one, or maybe they're going to do a pause. Once that happens, I believe all of this wound up energy is going to break and we're going to move much higher. I even believe that there's a potential for going as high as maybe even creating an all-time high. That's how wound up I believe the market is, and it's ready to go. Now, if that happens, I'm more apt to say when that happens. Now, for us, it doesn't matter whether it does that or breaks down because we can trade any of that event. What could be worse is if the market decides to go back into this volume node and just hang out there again because the Fed is sitting on their ass and not taking any action. But I think that most of the market feels confident that the Fed is getting to a point where they must do something. They've really hit the market hard with their interest rate hikes, and they've started to break things like employment and banks and other aspects of the economy that something has to give.